Chuck Carnaval. I'm the Chuck in the Markets Up Chuck. And today's blog post was titled Dividend Deals. And what we're really looking at is an opportunity that the current recession has created where some of our bluest blue chip companies, our real stalwarts, have gone on sale. And as a result of going on sale, we also saw their dividend yields increase to levels that are very competitive with fixed income now. In fact, almost equal to or just slightly less than 10-year Treasury bonds. But these are growing businesses that are currently trading at very low valuations with high dividend yields that also have a long history of increasing their dividends. First example here is McDonald's, and I want you to notice that McDonald's has tracked its earnings. Its black line is the stock price. You know, anytime you see the price get real low like this, those are clearly great times to be making purchases in a company like McDonald's. And thanks to the recession, the price is currently very low, and we have a current yield of 2.9%. You know, if you look back at the long-term dividend record in 1991, you would have started out with about a 1.2% yield, almost half of what you have, half of what you have now. But I do want you to notice, because this is a growing business, that McDonald's has increased their dividend each and every year, so that your yield has actually increased substantially, over this 20-year period. So one of the advantages of owning a blue chip like this is that you get a raise in pay every year based on the dividend, and where you would normally expect a low yield from McDonald's, today you get a very competitive and attractive yield. My second example is Coca-Cola, and there's a couple of stories here that I think are worth looking at. First of all, you got a 3.1% yield on Coca-Cola. That is very, very high, for an investment in this company. As you can see, again, stock price follows earnings. When it got disconnected in the irrational exuberant period, it created a long period of the stock price, doing poorly as it came back to earnings. But the point is, those are times not to buy the stock. But anytime you can buy it at or below its earnings line, those are great times to buy the stock. And one thing that recession has done is taking Coca-Cola and putting it on sale, so that not only are you buying it at a low valuation relative to historical norms, you're also getting a very attractive dividend yield of over 3.1% today. Now, just as was the case with McDonald's a moment ago, normally you'd be buying Coca-Cola starting out with about a 1.9 to 2% yield. Now you're starting out with a 3% yield. But once again, I want you to notice how the dividend has increased every year. As a shareholder in this company, this is simply based on a $100,000 investment. You just start out with $2,000 in income, going to $2,400 to $2,900. Each year as they raise the dividend, your income increased. So you're actually, as a shareholder, getting a raise in pay from the dividends alone from these great companies. And starting out with such nice, attractive yields, they certainly look quite attractive today. My third example will be Procter & Gamble. And again, I want you to notice the black line is the monthly closing stock price. This is a 19-plus year chart, a 20-year chart we call it. And you can see the price has followed earnings. It got overpriced for a while, came back to earnings, then tracked earnings are just slightly below it for a long time. But then the recession came, and there was some flattening in earnings. But I want you to notice how discounted the stock price has become. So now you've got Procter & Gamble trading at one of the lowest valuations it has in 2 decades, and it has a current yield of 3.1%. Now, once again, just like the previous examples, you have a company that has a history of increasing its dividend year after year after year, growing at about the rate of the growth of the company, which is 8 to 10%. So you're getting a raise in pay every year, and you're starting out, again, you would normally be looking at around a 1.5 to 2%, maybe, in 91 it was a 2.2% yield, but today, again, you're getting a yield over 3%. It's a terrific, high-quality blue chip company on sale. And my final example is another blue chip called, Colgate-Palmolive. We all know the company. Once again, I want you to see that, price was, very consistent with earnings. When the price got above earnings, it came back. But anytime price gets below earnings, it comes back to earnings also. And right now, stock prices are significantly below earnings, and you can see they're already trying to come back. You can get Colgate with a 2.2% current dividend yield, not as high as some of the others, but I might point out this company is growing a little faster and has historically grown a little faster. So once again, if you look at Colgate's long-term dividend record, you see the same consistent story. You have dividends that are increasing year after year. I actually call this the Rodney Dangerfield of investing. There's a couple of points here that I want to make before I close. Number one is, with each of these examples I've shown you, we have extremely high-quality companies that are very safe, solid, long-term investments relative to, a lot of other, say, riskier companies out there. They have good long-term dividend records. They pay a dividend. The companies do grow. But the reality of this is, for you to really get the benefit of this, you have to be an owner, a long-term holder. And this really speaks to the idea that, not this day trading mentality we seem to have in the marketplace today. You buy a great company like this, and you own it for a long period of time. You get a good dividend. You get some growth in principal, and you have a lot of safety wrapped up in just the quality of the company as well. You still have to do your homework and do your research, but this is, and I would recommend doing that on all these companies. But this is just some examples of the kind of opportunity that the current market has presented us. This is Chuck Carnaval saying thanks for listening, and talk to you again tomorrow.